For someone working for themselves, what is the main paperwork lenders need to see?
Lenders are looking at the consistency of income when you're self-employed and employed. Basically, one of the things the mortgage lenders have to establish is your ability to repay the debt, the loan that they're lending to you. So they're just looking for you to be able to prove a consistent level of income. Now, one of the key differences between employed and self-employed, of course, is that if you're employed, you might have a pay slip which shows you exactly what you're paid each month. But when you're self-employed, there's variations from month to month in levels of income. And so ideally, as a self-employed person, you would have to be able to demonstrate at least maybe 1 year's worth of figures. It's very difficult to work off something less than 1 year's figures. So when we say 1 year's figures, what does that actually mean? Well, the tax year runs from May to April, each year. And at the end of that year, you have to submit a tax return, which basically you're telling the tax man exactly how much money you've earned. And that's what the mortgage lenders are interested in. They're interested in you being able to prove this is how much money I've registered I've earned for tax purposes, and that's what they'll use then for affordability on your mortgage. The longer you have a self-employed history, the better, the more options that might be available for you. But that doesn't mean to say that even if you've just been doing it 1 year, if you've got your tax return submitted, that we'll be able to we can get a mortgage for you, basically. Other than that, so your business though might run from a different period of time, might run from October to October. So it might be that you've got your first year's accounts ready, but the actual tax year, it's spread over the first tax year. So long as you've got your first year's accounts, then we'll be able to use those as well. So really, self-employed, just looking at 1 year's proof of income, to get a mortgage. If you feel you're getting close to that level, might be worth booking an appointment with one of our advisors. Give us a call on 0121 323 4999.
Hello, Adam from the Mortgage Hub.
Hello.
Does it matter to a bank if you're a sole trader or a limited company director?
Yes and no is the answer to that one. The key difference between the two is, technically, when you're a limited company director, you're employed. You're employed by a company as a director. So from a legal standpoint, you're an employed person. But from the mortgage lender's point of view, when you're a limited company director, you have a controlling element over the amount of money that you might be able to earn, the amount of money that you might pay yourself. And so the lender is going to look a little bit deeper into that employed position. Depending on the level of shareholding, generally around about 20 to 25% shareholding in a company, they may look at you as in their eyes, as a self-employed person. And so you fall under their self-employed criteria. Now, what I always look at when dealing with a sole trader or a limited company director is, where is your income coming from? How are you paying yourself? And which of the banks and building societies, which lender is going to use that in both mine and your favour? So just as an example, if you're a sole trader, we're looking at your SA 302s, your tax returns, your tax computations, what you've told the taxman that you earn, and that will dictate how much money you can borrow. If you are a limited company director, you might have a salary and dividends. And the salary and dividends will gear, for some lenders, exactly how much you can borrow. If you are a limited company director though, you might have a salary and dividends, but your dividends come from your net profits. And so your net profits may be far more than the dividends that you've paid yourself. And you could have technically drawn more dividends out of the company, but you decided not to. And so some lenders will actually use the salary plus your share of net profit. Now, I've got a history of customers where their salary and dividends might have been, a £12,000 salary and a £30,000 dividend, giving them an income of £42,000, but their net profit was £100. And so if we use a share of net profit, that's an income for mortgage purposes of 112,000, because the salary is 12 and the share of net profit was 100. And so all of a sudden, if you're talking income multiples, which might be a conversation for another day, but in terms of income multiples, you'll borrow a lot more money if your income's 112,000 than it is 42,000. So how do you know which lenders are going to do what for you? Well, I wouldn't expect you to. That's where I come in, that's where my guys come in as advisors. We know how lenders will treat. We'll help you establish what your options are, make sure everything's affordable for you. All you need to do is give us a call on 0121 323 4999.
Thank you, Adam. Hello, Adam from the Mortgage Hub.
Hello again.
How do lenders handle it if your profits went up or down over the last 2 years?
It's all going to depend on why the profits went up and down over the last few years. It may be that you've been investing in the business, so you've been pumping money back in. It may be that there's been a huge downturn in business. So the lenders are just going to want to know the reasons why there's been that change. What we can help with is determining which lenders are going to look more favourably at you in terms of a mortgage application. You know, some lenders will only use the most recent year's figures. We know who those lenders are. Some lenders will average out the 2 years. Some lenders will look at a 3-year figure. So if there's just one low year in the middle, but the other 2 years have been absolutely fine, then great. You know, we also have lenders that look at things on a case-by-case and bespoke basis. So does it matter whether or not your accounts went up and down? Potentially. It could impact which lenders we can go to for you. Does it mean whether you can get a mortgage or not? No. It won't mean the difference between getting a mortgage or not. So what I would suggest you do is you come to us with all of the facts and figures, being as honest as possible about your circumstances, the reasons why things happen, and we will help you determine which is the best avenue for you. Just give us a call on 0121 323 4999 or visit our website, the-mortgage-hub.co.uk. Thank you.